Joining me now, CEO of Walser Wealth Management, Rebecca Walser. Rebecca, thank you so much for joining us. Let's take a look and get a fresh read of this economy and the status of it. The U.S. adding 114,000 jobs in July, but that's well below what economists had expected. Let's get your general reaction to these new numbers.
Yeah, we've had the federal chairman, Powell, really rely on labor to really delay rate cuts. And so what you saw on basically Friday was a big miss. We were expecting 185,000 jobs to be added. We only got the 114, and that is a big decline from the 179 we got the previous month for June. So now we're really starting to see obviously, as you report, the unemployment rate ticking up to 4.3%. That's the highest since October of 2021. And so the market is really starting to realize maybe everything isn't as great as we think. We also had the ISM and the PMI, the manufacturing, collapse kind of into contractionary territory in the last 2 weeks. So all of these factors together, Alex, is really making this market say, did the Fed miss their window? Are they too late on cutting? And certainly, now the Bank of England just cut this past week as well. So now the Fed is kind of on the outside of the central banks that haven't yet cut. And so the market is really looking for some help from the Federal Reserve.
Yeah, let's take a look at that graphic one more time. July's unemployment rate at 4.3%. This marks the fourth straight month it actually rose, fueling the broader economic concerns of a slowdown and potentially a recession. What do you think this is really an indication of?
Alex, we've had really bad problems macroeconomically globally for this whole year. Germany, China, they're all in massive, almost depression level. Germany is in depression level manufacturing crisis. China's financial markets are collapsing. So we've had a lot of global markets collapsing, and the United States has been very strong thus far, but we knew it was going to come to us eventually. We're not in a silo. We're very globally interconnected. So I do think that we are headed towards recession. We've had a lot of strong labor that has kind of kept it at bay, but now we're starting to see Intel announce they're cutting 15,000 jobs. That's 10% of their workforce. We've already seen a lot of our corporate layoffs earlier in the year. We've had small businesses have bankruptcy increases 60% first half this year for over last year. So overall, we really are starting to see some troubling sides in the economy. McDonald's having to have a $5 value meal burger that people still are not buying. The consumer is running low on cash, and this economy is getting very tight because of it.
Well, I want to be, transparent about at least how I feel, Rebecca, which is it feels as if for the last 2-3 years, it's been the boy who cried wolf, investors crying recession. I mean, what's going to make this time any different than what we've really felt or seen from economists for the past 2 or 3 years?
Yeah, I 100% agree with you. If you only knew how hard my job was, because we see the data showing that recession should come, but yet it didn't come, right? But now that we have NASDAQ in correction territory, it's already come down 10% from its previous high. So that means it's already in correction territory. And really, Alex, whenever you see the S&P 500 go up over 20% in 5 months or less, it always has been followed by a recession or a depression. And we certainly had Q4 of last year into Q1 of this year. We had that 20% run up because of AI and tech boom in less than 5 months. So we are due for something, historically speaking. And so I think that's kind of the difference. And also the global slowdown is really making a drag now on the United States dollar. Yes.
Rebecca, let's talk about the political implications of it all. JP Morgan Chase Chairman Jamie Dimon writing in the Washington Post recently, quote, "The next president must restore our faith in America, unite with regular, honest, and open communication." Obviously, this is a talking point for every politician out there, particularly the person that's sitting inside the White House. So what are investors watching for in this presidential election? What do they hope that this next president will bring to the table?
I think we just need more transparency. There's so many things now that we can verify with the blockchain and the blockchain crypto technology. And I think that when you look at the BLS, the Bureau of Labor Statistics, that reports our unemployment numbers, we've had the highest amount of revisions in the last 2 years downward. So we come out with a great number and the market would like it and say, oh, everything's great. But then the next month they quietly take over. They quietly erase 100,000 jobs that they had previously added the month before. So this is the largest amount of corrections to the downside that we've seen since 2008. 2008. And obviously it's an election year and all of these things you can kind of expect. But I think the American people just want transparency. Don't tell me that inflation's only gone up 5% when I go to the grocery store and I'm buying with my wallet and I see that my dollar is not going as far. So the American people can't reconcile what the Wall Street experts tell them everything is fine with what they're having to do at the kitchen sink and at the kitchen table and buying their groceries and paying their bills. And I think that is really what people are looking for. Tell me something that jives with the experience I'm actually having in this economy.
CEO of Walser Wealth Management, Rebecca Walser, fantastic insight. Thank you very much.